Hello, Graham.
I did just post a 60-minute income trade in Telegram. Just FYI.
Is it a break to the downside?
It sure is.
All right, got a little red out there.
Hmm.
Not too bad. Tesla was up over 3%. I don't know if you guys saw. I went ahead and took some of the contracts off that we put on earlier in the week. About 140% ROI there on Tesla. So a nice little pop on that one. I've got a couple more left on. Morning, Couture, Crink, David, George, Steven, Susan. Hello, hello, Harold. Hello, Diane. Hello. Hope you guys are doing well. Yeah, we've gotten to a pretty tight range here the last couple of days. Let's see, since I guess that'd be July 3rd, where we popped to all-time highs. The next 4 days so far really haven't even gotten outside of the July 2, July 3 range. We basically stayed right inside there. So definitely a tighter consolidation. Some of that breathing room, like Graham was talking about, once we cracked all-time highs. And I think that's probably a good thing net for if we want the market to get another rip, to have a little bit of this sideways cool off versus a big flush. So we'll see where we go from here. I think I'm still pretty optimistic after cracking those highs that by July 20 or so we're gonna get another rip, and I think beat those highs by a couple percent. So still pretty optimistic, but having a little bit of a cool off here. Bitcoin's the one I'm really interested in. It cracked all-time highs or very close, depending on what source you looked at. Some sources Bitcoin was all-time highs, and some sources it wasn't. So it depends on your source of truth there for Bitcoin. Excuse me. Yesterday, right around 4 p.m., cracked the lid and then backed off, like it seems to pretty much do every time it gets near there. So I personally think we will get another test here back to the upside. If you guys like the idea that we'll do that, let me show you a super aggressive trade you could make here on Bitcoin. Let me just show that to you real quick. This is like the lotto pick trade. So Bitcoin, let's just go to the chart real quick here. I'll show it to you on IBIT. Again, depending on your source here, it's right, I mean, just within pennies. TOS has IBIT at the all-time highs. I know some of the Bitcoin futures had it just a couple pennies below. So it depends on where you look. But if you like that, it's not just going to at least retest this high, but maybe get another move higher. So like, typically when Bitcoin makes a move higher, like this last one, you can see it really rip. Here we got a break and then it's just kind of a cool off. So I'm leaning toward, now that we already got the cool off from the May highs, we might get a full rip. I was showing the guys last night, if you guys jumped on, typically, if you just go back and look, when Bitcoin has 3 green weeks in a row, it's very, very rare that you don't get some pretty good follow through. Now, it has happened maybe 2 or 3 times, but like the other 10 times that you got 3 weeks basically building momentum, it really ripped. Bitcoin is a momentum asset like none other. So all that to say, if you wanted to take a lotto pick, really aggressive trade here, you could do what I kind of do with jump trades, where you go to IBIT, right? And then you pick your expiration. You could go out 8 days, 15 days, 22 days, however much you want to give it. I like this 15-day, basically say, hey, can the next 2 weeks be super aggressive? And instead of going for like a defensive income trade like I would typically make, you go all the way out and trade like the $66 level for a really aggressive move. So you go down to the 65, 66, and you're going to trade that for like 26, 27, 28 cents, which is well over a 200% ROI if you can get a pop on Bitcoin, where basically you're playing it. Listen, it's not just going to touch these highs around 63, 64. It's going to rip through. You could even go higher. I mean, you could go just as aggressive as you want to be, take the 66, 67, and now you're more in the 300% to 400% ROI. Now, the reason I'm showing you this isn't because I think, IBIT at a 400% ROI is necessarily a high probability trade. What I'm showing you is that there are risk-defined ways to take these really aggressive trades versus just saying, okay, I'm gonna buy some Bitcoin and hope for the best. By using a debit spread, or you could flip it around as a credit spread if you want, but I think debit spread much better in this case. You can do this with a, go ahead and take your high risk shot, but do it in a risk defined and actually a very cheap way of doing it. Something that Graham will talk about, like with the perfect income style as well, where actually being more aggressive lets you get in cheaper. It's kind of one of the unsung benefits of trading this way as well, where people will talk about being aggressive as being high risk. In reality, it's actually lower risk. You're risking less true dollars there. So anyway, I'll pop this in. If you guys want to think about this trade, it's IBIT. I'm not going to give you an exact trade here because it's kind of pick your own path. So basically, you can pick how aggressive you want to be. 64, 65 calls, or 65, 66 calls, or super aggressive 66, 67 calls, and then choose your expiration. 8 days, 15 days, 22 days. So kind of a choose your own path there. If you like Bitcoin, I'm pretty optimistic that Bitcoin's going to try to make a rip here in the next 2 weeks. Like I said, last time it tried and then it cooled off. I think this time we'll get a little more horsepower behind it. So kind of take your own path there. One other thing on my list real quick here, a little housekeeping note. You guys should now be seeing the New Money Crew newsletter in your inbox. So if you signed up, give me a yes in the chat if you signed up for the New Money Crew free newsletter, because you should now have it in your inbox. And if you have not seen it, then there is a chance that it went to spam. So we're trying to make sure our email is healthy and it's getting to everyone who signed up. So if you guys don't mind just searching in your inbox New Money Crew if you signed up, even if you have not seen it, and then check spam. If it is in your spam, just make sure you mark it as not spam because that'll make sure that it then goes into your inbox. But if you guys can just really quickly go in your inbox, search New Money Crew, open that email, mark it as non-spam, mark it as primary folder, all that kind of stuff, just to make sure that we get that email where it's supposed to go into everyone who signed up inboxes, because these days with Google and Microsoft, it's like you got to jump through a million hoops just to actually get your emails to the people who signed up for them. So if you don't mind, please do that for us. That would be really helpful, just to make sure that email is getting to people going forward. All right, I think that I'm done with my housekeeping notes there. And if you guys don't have it, you can, it's free. You can sign up for it. That's what's going to get you that daily scan with the opportunity. Just a couple of stocks that meet all of our criteria each morning. Jimmy, if you didn't get it, check your spam. Make sure you look for that. I'll find you guys the subject of today's email, so you can even search the subject of today's email, which is NVIDIA at 4 trillion. So I just posted in. That's what you should see in your inbox today, and please do make sure you add it to your contacts. Make sure you mark as not spam, please, because Google is brutal with that kind of stuff. So, all right, I'm done. Thank you.
That is wild. NVIDIA at 4 trillion.
Unbelievable. I actually, when there was that battle where Apple, Microsoft, and NVIDIA all kind of got up there around the similar time, I was definitely betting on Microsoft to be the first to 4. So NVIDIA, just unbelievable what it's done.
Yeah. It's looking really good too, even with opened higher today, flush out a lot of the mags. We're sort of doing that right now with the open higher and then instant fade at the open, but NVIDIA's looking really good.
Tesla up 3+% today. So if any of you guys took that trade that we took earlier in the week, that one's a beauty. Okay, if you guys didn't get that email, it should be in your junk or your spam or something that you have to go dig out and mark as not spam. Okay, folks, if you did not get it and you wanted to get it, uh, please pop your email to me, and I'll have Deanna get that flipped over to the email team, and we'll make sure. So if you know for sure you signed up and yet you did not get the email from New Money Crew today, uh, pop your email in the chat. We got to do some troubleshooting here. This is not to bore you guys with behind the scenes, but some of the stuff we have to do for managing large networks of emails. We got to go through these email health things, make sure people are not marking it a spam, all this sort of stuff, just to get you what we're trying to get you, what you signed up for. So if you check junk, you signed up, you did not get it, pop your email in there, and we'll get that up to our email team and try to get it all sorted out for you. All right, Graham, I said I was done 6 times. I'm actually done now, so you can start with
You are all
getting on
good.
to what people are actually here for.
When we started, you were talking about Bitcoin, and I was going to show this chart again today on Bitcoin because it's just crazy where we are right now. Obviously, kind of like here on the timeline, somewhere in here. Bitcoin just popped to new, depending on, again, what you're looking at. But I think this is going to be the final run up here. And I shouldn't say final, but I think it's going to be one of the last ones that you don't want to miss. I think the base case scenario is Bitcoin to 125K. In my opinion, the upper range of that would be 150K. Some people say 200, 250. I think that's a little bit extreme. But if you just follow the liquidity, the money supply, it lags it by about 3 months and tracks it near perfectly. So we're seeing that happen right now with Bitcoin. Definitely something you want to be in my opinion. It's something I'm invested in. IBIT is the easiest way to do it. If you want to go leverage, you can go BITX. That's the 2x leveraged ETF. Now, keep in mind, leveraged ETFs are not perfect. They lag. They decay a little bit faster, and then they drop a little bit harder and fall. So just be smart if you're doing that. Now, I like to use wrap orders on Bitcoin. I like to use my out-of-the-money debit spreads that I call the elite trade. But today, I will walk you through the wrap order here in just a second. But before I do, Nate, check out this. I'll share this on Tuesday, too. But I mentioned this the other week and it didn't really click for me until recently. And then I saw this last night and found it very interesting. So originally I thought ChatGPT is awesome. It is. I use it every day. It's going to hurt Google because people aren't going to use Google search as much. So Google ad revenue will be down. Google will lose some market share, which I do think is a case. However, right now we are seeing that Google's AI, Gemini, which I've been using regularly as well, and I find it to be more powerful than ChatGPT, is growing much, much faster than ChatGPT is right now. So here you see the traffic in ChatGPT versus Gemini. Now keep in mind, ChatGPT did have the early advantage, so it's not going to see as big of growth month over month. However, Gemini is gaining a lot of steam, which could be very positive for a company like Google. They've been
Do you have that in gross terms? Because I'm curious. I was actually looking at something similar, but I assume that ChatGPT had such a massive head start that the 148 is still a drop in the bucket. But I don't actually know what the base numbers are.
No, it definitely, I don't have it. I can go pull it, but I would assume the same thing that ChatGPT still has overall dominance. But just seeing this catch up happen, especially, I don't know if you guys have seen the recent Google commercials. I think they've been really great. I always watch commercials to find some interesting stocks like Progressive. Progressive is always running commercials. That's why I said, they must be doing good acquiring customers. Google's new commercials are pretty cool, showing off their AI, and I think they're going to start getting a lot more eyeballs there with it. I know they've gotten mine, and I've been using it more with that. So that's just something interesting to keep an eye on where Google might maintain dominance here and take over some market growth. What I really like, actually, Nate, not to go on too long of a tirade, I use Google for everything. Google Docs. We're in a Google presentation here. I use Google Calendar. I use Gmail. The Google AI just automatically integrates with all of those things.
Yeah.
Versus ChatGPT, you'd have to go get some sort of plugin or some sort of app to connect it. For me personally, I would much rather use something that's already integrated with everything else I do.
Well, that's why I think Apple still has a feather in the cap once they decide who they're going to integrate with, and they go full on with all their devices, and they have the buyers already baked in. I think that's going to give them some upside. This says total 800 million versus 350 million. Honestly, not near as big of a gap as I would have thought. I would have thought it was like 800 million versus 70 million.
Right.
It does say active as of April 9 million versus 90 active daily. I don't know. That's April, so we're already if they're growing that fast, it could have already closed that gap. So interesting to see. The other thing though is with how quickly AI is reproducing itself in other variations of the Groks, the Geminis. I don't know if you guys have used Manus; it's insane, and a whole bunch of other ones. If you just end up splitting up the market share so many different ways and in so many different specialties that it's hard for anyone to really have a dominant edge. That'll be interesting to see as well. I think what you'll start seeing is people just trying to acquire, as aggressively as possible all of the competitors, like Meta's been so good at on the social media side.
Yeah. All right. Well, today, just taking a look, markets are flat. SPY 0.02% down. Kind of boring time in the markets. I think it's good. A little cool off, like Nate said. But today, I'm going to show you one of my favorite ways to trade. And if you've been here all week, you know probably what I'm talking about here. The dollar options that I've been teasing, hinting at. I'm going to actually walk you through it step by step, how to trade the options, how the numbers work, how the mathematical odds work in our favor, and why I believe it's a legitimate market hack. And again, this is going to be meat and potatoes. This will be recorded. You can go back and review it. In fact, if you have one of the opening playbook $1 VIP memberships, you should already have this recording in your members portal. But this is my way to target right around 100% moves each and every week from tiny, tiny stock moves. Now, a stock can gain, it can go to the moon, it can gain 100%, it can gain 1,000,000,000,000%. The upside doesn't matter to me. What's cool to me is that this thing doesn't even have to move a full percent for me to double my money. It's been working out great for me, as well as many, many other folks. We get a whole testimonial doc of people using these wrap orders, these dollar options to their advantage. So it's a unique way to target right around 100% ROI each and every week from a very tiny move in the stock. And I really do mean tiny, like 0.3%, 0.5%, 0.7. I'm not saying 3% or 7%. I'm saying 0 points, so less than 1%. Now, really quick, let me ask here in the chat, who here knows a way to turn a 0.5% move in a stock into a 100% gain or a double? Does anyone know how to take a 0.5% gain in a stock and double your money with it? Other than if you know what I'm talking about here, you probably already know this, but any other way? I'll wait here in the chat and see if anyone has any fun ideas. Because if you do, I'm all ears. We got no, no, no. Mary says dollar options. Mary, you're ahead of the game. Well, based on everything I've seen, and I've seen a lot, maybe you've seen more, but I've seen a lot, it's impossible to do this with normal options. That's because with normal options, you typically need a 5, 6, 7, 10% move in a stock to see a double on your options. I think we've all experienced that firsthand. But I'm able to do it when a stock gains less than 1%. Now, I've been trading this way for years now. In my original portfolio, trading these wrap orders, these dollar options has been on fire. You probably heard me talk about the perfect income trade alert before, especially this week. We're averaging 93% on the winners in a 1 week period. When you take across the average return of winners and losers, 32% a week average net return. That's pretty insane. If I did 32% a year, you should be blown away. We're doing it each and every week. And if you're only risking 15% of your account, trying to scale it that way, we walked through Cager last week, the compounded annual growth rate. We're at 537% with only 15% of the account at risk. If I bump it up to 20%, it's like 800 something percent growth. So it's a very, very cool, consistent way to target doubles each and every week. Now, I'm not kidding when I say these wrap orders may be the most powerful tool in your options trading arsenal. Now, it is a debit spread. It's a basic debit spread, and in my opinion, not scary at all. You might hear the word spread and freak out if you've never done it before. Guys, this is no different than buying a call and selling a call. If you've ever traded calls straight up and bought one and then sold it later, well, you've essentially done all you need to do for this. Now, the beauty of this is we're able to drastically reduce our risk, right? I'll show you, instead of paying 500,000 bucks, 2,000 bucks for an option, we're able to get them for 50 bucks, a buck, 50 cents, a dollar per contract. We're also able to offset the option time decay and then also reduce that cost of entry, while at the same time we increase our win rate, we increase our profit factor, we increase our net return, which is really, really important. So let's go ahead and dive into this. Now, in my programs and here on the opening playbook, we've already covered basic options that we can use, buying calls or buying puts. And real quick here, let me just ask in the chat. Does anyone here in the chat, would you guys like us to do a more very, very basic options class on what a call is, what a put is, or do you guys feel pretty good about that? If you want a class, say yes. If you feel good about it, say no. I just need to know if we need to spend any time on it. All right. Well, maybe I mean, probably Nate, you tell me about 80, 90% of people here saying no, no need for it. 10%, 20% saying yes. Maybe what we can do is just put something together in the opening playbook members portal for
Exactly what I
folks.
was going to say. Just have a couple videos there then on the basics because it seems like most of our opening playbook people are pretty solid.
Right, right. All right. Well, in essence, guys, the way options work, if you buy a call, in theory, you win if the stock goes up, right? You buy a call, you want the stocks to go up. If that happens, you make money in theory. Puts, same thing, but to the downside. You buy a put, if the stock goes down, you make money in theory. But the problem with buying premium, and I've told you this for years now, the problem that no one talks about is time decay. In essence, when you are buying a call option and you think a stock will go up, doesn't mean it's just going to pay you if it does, because the problem is the longer you hold that option, the more that time premium loses value. And that's why sometimes you can be totally right about the direction of a stock and still lose money with options. Now, I'm going to give you an example here. This was in the dollar options deck. This was actually one of my trades I took on Apple. I went long Apple, entered September 20th. Apple gained 2.6% on the stock. That's a really good, solid move, right? I'm right about the direction. Problem is, my call options, which you can see a screenshot of them right there, lost 20%. And they weren't even close to expiration. They still had a whole month until expiration at that point. So Apple gained 2.5%. Call options are supposed to go up if the stock goes up. Meh, not so fast. Lost 20% on this one, and that's because of time decay. So how does that make me feel when you're right about a stock and losing money on the options? What makes you feel like you're running into a brick wall? Like, how can I even win? Well, the truth is, if I'm trading a stock like Apple or Nvidia or Microsoft or Meta, and I'm holding for a couple of weeks, 30 days, I'll need at least, listen to this, I'll need at least a 4 to 5% gain in the price just to break even on my investment. Think about that. In this example, if I wanted to make $0, 0%, I needed Apple to double this move that it made. So I would be super, super right on the move of the stock and still make nothing. Now, you probably won't hear about this on YouTube or CNBC, but to tell you the truth, this is my opinion. For the most part, buying calls or puts straight up stinks. In fact, you've probably heard this stat before. The Chicago Mercantile Exchange discovered that up to 76% of all options lose money, even if you're right about the underlying move. And this is so frustrating, right? You do all the hard work, you do all the research, you find the right opportunity, you are a winner, and you lose money. That's not fair. So I hope you can see why trading basic call options can be a losing proposition. But with the dollar options, with the wrap order, with the perfect income trade, like I'm showing you here today, by using this technique during that same stretch, same time frame over that 4 weeks, I had 4 weekly opportunities. Again, this is based on real trades I took with real money to demonstrate the power of this to you. Week one, I made 98% return on my investment. Now we don't win every week. Week two, stock dropped. I still need the stock to go up. Week two, took a loser, lost 100%. Week three, tiny move in Apple, made 85%. Week four, 110% gain return on investment. Now, when you net that all out over that same 4 week period, just weekly options using this wrap order technique, that's a net 193% return on investment. And yes, this is a real life example. These are real money trades that I took. I actually sent it out to folks, the members as well. So the question is, what would you prefer? Would you prefer to trade basic call options here and lose 19%? Or during that same period, same stock, just a different options application, would you rather make 193%? Let me know in the chat if you're one of the people who wants to lose 19%. Well, with the wrap orders, It's way different. Lose 190 bucks or make 1,930. Pretty obvious. This isn't a trick question. It's very, very obvious, but most people have no idea about this nor how it works. So, how does the wrap order work? Well, let me walk you through it step by step. And again, this is a spread, and that might sound complex at first, but once you get the hang of it, one or two of these trades, I promise you these are very easy to do. Now, the session will be recorded for you to review, and it will be in the opening playbook members portal. Nate, if you don't mind, throw that link here in the chat. So if you don't have the $1 members portal, you can access the recording. Now, wrap orders are a simple debit spread. However, I give them that name, that wrap name, for a very specific reason. And that's because when selecting these options strike, we're always going to wrap the current price of a stock with two strikes. For example, here's a hypothetical, just so you guys know. If Apple's at 100 bucks and we're bullish on Apple, we think Apple's going to go up in value, we can wrap the current price of the stock by buying the 99 call and selling the 101 strike call. So get it, the price is 100 bucks. We're going to wrap it by buying 99 and selling the one above it. Now we win if the stock finishes above that higher strike price. Now here's what the order would look like. And again, this is a theoretical example, so don't go to Apple and try and put this in. But if Apple's at 100 bucks, again, you buy the one strike below, sell the one strike above, in essence, wrapping the current price. Now, for entry price, you always want to look to enter for around half the difference of the two strikes. So in this example, the difference of the two strikes, 99 and 101, anyone know what the difference is? $2, right? 101 minus 99 equals 2. Now we always want to enter for roughly half that price. Why? Because that's going to give us the opportunity to then double our money. So in this example, if we're buying the Apple wrap order, we'd want to enter for about a $1 debit to enter. Get it? Dollar option, dollar debit to enter. Trying to make it easy for you guys here. Now, the most we can lose is the amount we pay to enter, just like buying calls, right? If you buy a call, the most you can lose is the investment you put in. In this case, it's $1 per contract. So if you buy one contract, most you can lose is 100 bucks. The most we can win, again, is that difference of the strikes, which was $2. So we can buy it for a buck and have the chance to sell it for $2. That's 100% return on investment. So in essence, if we're wrong, we do need to be right. If we're wrong, we lose our stake, just like trading calls or any other sort of option out there. However, if we're right, we make a double. We make 100% return on investment. And if the stock stays flat, if it literally gains $0.00, we're going to break even. Make about 0% return on investment. Meanwhile, call buyers are going to lose money for sure, like I just showed you. Now, wrap orders are designed to be as close as possible to a 1-to-1 risk to reward ratio. In essence, you risk $1 to make $1. Risk 100 bucks to turn it into 200. In other words, oh, there we go. Risk 100 to make 100 profit. Now, the reason why the 1-to-1 risk reward on wrap orders is a winning proposition is because stocks tend to go up over time. Again, look at a chart of the S&P 500 over the last 20 years. Are there down periods? Yes, but more often than not, what is going on? Stocks go up in value. They appreciate in value. Now, with a 1-to-1 risk to reward on a market that tends to go up, we're going to have an edge. And that's how we can generate these casino-like odds, just by being consistent with our trades. So how do we win? We win if the stock closes above the higher strike in the wrap order, and if so, we should make around 100% ROI. Sometimes it's more, sometimes it's less, but normally right around a double. So in this example, when we bought the 99, sold the 101, we're going to win if Apple closes above $101. Now it could go way higher, but as long as it's above 101, we're going to double our money. So to help solidify the power of wrap orders and why they're so much better than normal call buying, in my opinion, let's walk through some scenarios to compare the power of wrap orders with call options. So remember, in this example, let's say Apple is trading at 100 bucks and we do that wrap order I just walked you through. Well, let's see what happens. I'm going to give you 6 different scenarios. If Apple falls that week, Apple drops below 99 bucks by expiration, with the call options, goes against it, you're obviously going to lose. With the wrap order, again, this is technically a directional trade. We just don't need that much direction, but when it goes against us, we lose. That happens. What happens if Apple's flat? Apple stays at 100 bucks by expiration, didn't gain a penny, didn't lose a penny. Well, call options, again, you're going to lose on time decay. You're probably going to lose 20, 30% on your option at least. And if you did a weekly option, you're going to lose 100% of that investment. However, with the wrap order, because of the way we are trading these, they offset time decay. We're going to break even, meaning Apple stays flat, we stay flat. No big deal. What if Apple goes up 50 cents by expiration? Barely moves, gains 2 quarters there, 50 cents. Well, again, call options, you're going to lose money on time decay. And with the wrap order, we're not going to lose money. We're not going to break even. We're actually going to make about a 50% return on investment. What if Apple goes to 101 by expiration? Gains 1%. Well, with call options, you might get lucky and break even. If we're being honest here, you're probably going to lose money still on time decay. Like I showed you in my example, Apple gained 2.5%. I lost 20% of my investment. So if it gains 1%, you're probably losing money. But with the wrap order, we're going to double our investment. What if Apple goes up 3% that week? Goes to 103 by expiration. With call options, you'll probably start making some money. You'll probably be up 20 to 30% on a big move in Apple. Again, with the wrap order, you're going to do much better. You're going to make a double, 100% return on investment. Now, let's have a very rare scenario here. And I'm not talking about earnings because that's going to throw a whole nother monkey in the wrench for call options. But let's just say on any given week, Apple surges 10%. That would be very rare, but it can happen. Well, this is one of the cases where the call options would probably outperform. You'll probably make over 100% on Apple. However, with the wrap order, we're still doubling our money, even on this rare scenario. So, in conclusion, when we tally it all up, let's look at the 6 different scenarios for call options and the 6 different scenarios for wrap orders. Call options, you have of the 6, 3 where you're losing money, 1 where you're breaking even, 1 with a small profit, 1 with a big profit. However, with the wrap order, only 1 scenario where you're losing, 1 where you're breaking even, 1 with a small profit, and 3 with a big profit. So just blindly trading here, you have a 33% chance of winning here with call options. Does anyone think that's very good? If you have a 33% advantage in the markets, probably not. With the wrap order, we have about 67% chance, 66.6% winning odds on our sides. Now, that's casino-like odds simply by staying consistent. So to recap here, if Apple's at $100, we want to wrap the current price with the $99 and 101 strike call options. So if Apple's at $100, we want to buy the 99 and sell the 101, and we want to enter for about half that difference. So $1 to enter here, half the difference of the strikes. Let's look at it visually here for a second. Say Apple's at 100, we think it's going up, buy the lower call, simultaneously sell the higher call, hence the name wrap because that current price of the stock is wrapped. Now, if Apple closes above 101, it could go 103, 104, 105, 110. As long as it's above 101, we're going to double our money. And in this case, that's only a 1% move on the stock. So, how do you calculate the risk to reward? Well, I could walk you through it step by step, but I went ahead and tried to make your life a little bit easier here. Let me go ahead and pull these up for you. These are in the members portal. If you do have that $1 membership, got an opening playbook. Let me move my screens around here. All right. Let me zoom out on this a little bit. All right. Members portal. We're going to scroll down here to the wrap order calculator. Should see it right there. Now what we're going to do, once it loads, I'll zoom in again. For this example, we're using the bullish wrap order. There's a bearish one too if you're using puts, but here we're talking about longs. So again, let me just type in that Apple example. We said we're buying the 99 strike, right? Bought. Now which one are we selling? We're selling the 101. Let me just put in one contract here. Let's say we entered for $1, like this example showed. This does all the math for you. It shows you your total risk, max income potential, percent gain, and your break-even calculation. That's basically how it works in essence. And then same for puts. I'm going to walk through live trade examples here in a second. I'll cover more of that in a moment. But first, let me give you another practical example of why these are so important. In my on-the-clock stocks program, I did a buy alert on Google. Stock went up 2% in a week, 2.1%. That's great. Now I issued both the call options and the wrap order to the members just to show you the power of it. With the call options, we were up 30%. Good job. With the wrap order, we ended up making, actually, I think it ended up a little bit higher than this, but 81% here on this screenshot. So which would you rather have, 30% or 81% on the same time frame? See, in this case, all I needed was a 0.7% gain in Google. Needed to be above 140 by that Friday to make my full profit potential. And if Google was still bullish, well, on Friday, I could re-enter the position again for the next week's expiration and target another 100% ROI. So sometimes, and you'll see this in the perfect income portal, there's stocks we really like. So we can just trade them week after week after week as long as they're still bullish. And that's exactly what happened here. In the case of Google, week one made 74% on the wrap order. Week two made 100%. So first week, 74, second week, 100%. Over that 2 week period, we're looking at 174% return on risk. Now, the call options actually did great for members, made 132% on the basic call options. But the wrap orders in this bullish scenario still outperformed a pretty much best case scenario for Google. Call options made 132%. Wrap order 174%. So again, which would you rather have? I think you'd rather have the wrap. And if the entire wrap order is in the money at the end of the week, your brokerage should automatically exercise both sides and offset the calls for a max profit. Meaning a lot of the times we don't even have to exit the position if it's in the money. Meaning like here's our wrap order and the price of stock went way up here. We just let it expire and our brokerage takes care of it. Now, if the spread is in the middle, like on that example, on the Apple example where we did the 99 and 101, if Apple's in the middle of that, we can just sell our debit spread back before 3:30 p.m. and should have a nice little gain on it. And in this case, that one I just talked about, we should have about a 50% return on investment, even on a tiny move in Apple. Now, of course, in my premium alert services, I do all the heavy lifting for you. I send the entries, calculate the odds, give you the exact options, and follow up with exits. But if you would like to manage some of these on your own, which I would, even if you're paper trading it, I recommend learning this strategy at the very least. Well, let's talk through that. Let's see how you can do that and check out the calculator. Now, I have combined these into two calculators I've got two different spread strategies, the wrap order and the lead trade. So I put them all in one for you, making it easy. So let's leave the PowerPoint, head over to One Click Trading and our brokerage account. Alan, how does a wrap order make more than 100%? I will show you here in just a second. All right. Let me pop this guy up here. Try and get it to fit the screen size. And then let me go get my calculator. So we're ready to have that handy. And then let me pull up the trade doc for you guys so you can have it with the recording. All right. This week we had Apple. Oh, nice. Apple's making a move higher. Love to see that. This week we had Apple post a Apex entry, perfect Apple entry, and we're seeing momentum flip back. Bullish, tech's hot. Apple's playing the catch-up trade right now. I like Apple right now. They do have earnings coming up on 7/31, but this week Apple looks really good for me. Now, today is Thursday, so I probably won't do tomorrow's expiration. I mean, if you want to, you can roll the dice and shoot for 100% return on investment, actually a little higher if Apple gains another 1% between now and tomorrow. But I'm going to give it more time. So typically I go about a week out on expiration. I typically do this on Monday and pick that Friday's expiration. So we like Apple right now. Apple is trading at 212.72. So what we want to do is wrap the current price of the stock with the two strikes, one lower and one higher. So I'm going to come here to Apple. And first, let me just check out this one, 212, whoops, 212.15 or 212.50. Sell the 215. So the current price is in between those two strikes. Does everyone see that? Oops. So we're buying the one below, selling the one above, and it's currently trading at 118 debit. And this is going to answer your question, Alan. So let's go ahead and go over here to the calculator and just type this in real quick. We want to buy the 212.50. We want to sell the 215, and it's currently at, what did I say, 218 or 118. Net debit, it's at 120 now. So I'll go ahead and put 120 in here. Well, luckily the calculator does all the math for us. Total risk, 120 bucks, right? $120 a contract. We're doing 120 bucks risk. Max income is selling it back for the difference of these two strikes, 250 minus our entry, 130 bucks. Now, if you look at this, That's 108% return on investment. We invest 120 bucks to make a profit of 130. That's over 100%. And the calculator even gives us the break-even calculation for Apple here. Now, visually, before I ship this one off, let's just look at the chart to see what that really means. Again, we're trading the 215 is the one we're selling. We're doing next week's expiration, which was what, 18th? Yeah, 18th. So I didn't zoom over enough. Here we go, 18. So do you see where my crosshairs are here? What we're doing here is we're making a bet. I showed you in the dollar options presentation. We're not making a bet that Apple, continues at this trajectory and goes all the way to 223. We're just making a bet that Apple will drift ever so slightly in the direction it's already heading over the next 10 days or so. That's all we're doing. And if we're right, we're going to make 108% return on investment. So do you see how much time we have for Apple to barely move higher? Now, to give you an exact number, and Apple's moving higher as we speak, but right now, Apple is at 213. We want it to get to 215, so I'll just say minus 213. We need it to make a $2 move, actually about a buck 78 right now on a $213 stock. That's a 0.8% gain in Apple over the next 10 days or 8 days to double our money. 0.8%. To give you an idea of how small that is, Apple's up 0.9% today, 1% today.
So
So
it's up 12 times as much as it needs to go today.
it's, 0.8%. So it's up like 150%.
Okay.
Yeah. But if Apple makes another move even smaller than this over the next 8 days, we're going to double our money. So now price has probably moved up because Apple's moving up. But again, you can punch all of this into your calculator and you can see the risk return is still right around a double if the thing barely moves. So I'm just going to set a limit order here at 125, ship it off. Thinkorswim does the calculation for me. And then bam, we'll see if it fills. There you go, filled right away at 125. Yeah, Karen, I took that one myself. So again, what I'm betting on is that Apple just drifts above this line in the sand by that date. If so, I'm going to make 100% return on investment. Pretty cool. All right. What's another stock we like right now? Anyone? I would not do it on Hood right now because it's so parabolic. I would look to use a different type of order. JP Morgan. I like JP Morgan. Let's see what their earnings look like. They have earnings next week. I probably doesn't really move a lot on earnings, but I don't really want to risk it here. AMD. Okay. I like where you guys' heads are at here. I like AMD. Wow, up 5% today. This might be one where we want to look for a different type of training class for this one, but you go out further out of the money. So here, if AMD makes another move like this, you can make more than 100%. Let's see, like if you go way out. But so basically what I'm trying to say here is because AMD is so volatile right now, I don't really want to bet on it making a less than 1% move because it's either going to go way above that or way below that. Instead, I want a more stable stock that'll
You know,
grind.
it's been a steady, stable, kind of boring stock that I've been liking, Graham, is Dell.
Oh, really? I haven't looked at
That's actually
Dell
the
in
one I
forever.
gave away last night. It's kind of lagged behind the other boring, the IBMs and the Cisco's a little bit, but starting to pick up. I had this trend line drawn on the weekly chart forever that it crossed, and it just kind of been churning up boring there. So that's one that I like. Oh, by the way, I forgot to say this. Today, later on today, I have an all members class where the whole point of the class is to walk people through setting up debit spreads. So I decided I'd do it on my Schwab account, Tasty Trade account, and a Robinhood account for everyone just to walk them through. So if you guys are members of any of my services, keep an eye out for that, and then it'll help with wrap orders as well because it's the same structure.
Ooh, Carvana's been another good one. Here, I'll do one on Carvana because I want to show you guys something cool. So Carvana is a $350 stock, right? If you want to trade Carvana's next week options, they are $1,000 a contract. I'm not making this up. You can see it right there. 1060. That's $1,000 to buy one contract of Carvana. However, with the wrap order, $133. 1/10 the cost, essentially. Little bit like 1/8, but you get the picture. We don't have to risk $1,000 to do this. So let me go ahead and look at Carvana here. Um, Make sure there's no earnings. Nope, not until further out. I'm going to do the same thing on Carvana just for example's sake. Now here, we want to wrap the current price with the 350 because the price is 351. So we want to buy the 350, sell the 352.50. Right now it's at 133, which isn't as favorable, and I'll show you why. This is why Nate's, the tools like the income machine are so helpful because you can skip all of this process. Does it all for you. We should make Nate a wrap order income machine. That'd be pretty cool. So Carvana right now, we can make a bet here with the wrap order with an 88% ROI if over the next week, I'm going to do my zoom in. I'm just making a bet that Carvana is above. Do you guys see where my crosshair is here? Look at that. Thing barely has to even inch higher over the next week for me to make almost double my money. So it's 88%, but pretty darn close to double my money here on Carvana. Now, what I'm going to do here, I'm actually going to move the strike out and see if we can get a little bit better. Actually, that's so. Oh, this is one higher. I see. Let me look here. If you want to, because this is such a tiny move, if you want to, and look at this, does this look like a big move to you guys right now where my crosshairs are? Anyone? No, no. I agree.
Huge.
I agree. So this is not technically a wrap order. I'm going a little bit out of the money because it's such a high-powered stock. But here, what I'm going to do, actually, I didn't even send that last trade in the chat. I apologize, guys. Um, Let me just make this real quick, and then I'll fill the Apple one in later. Hopefully, you guys got it. Wrap order training ticker Carvana options. I'm going to buy 18 July 25. I'm going to move up further out of the money here, buy the 355 strike, and I'm going to sell the 18 July 357.5 call. And right now, this is a net debit of 113. So here's what I'm doing here. I will send you guys the Apple one next. So 113, let me pop this in here. We're going to buy the 355. Again, I'm just moving a couple strikes out of the money to give us a little bit better payout here. Now I'm going to make 120% return on investment per contract if Carvana is above this crosshair you see right there. So again, it does not have to go parabolic, does not have to go to the moon, just has to drift ever so slightly in the direction it's already headed. If so, I make 120% return on my investment. To give you an idea, if you bought those call options I just showed you, those $1,000 call options, to double your money, you need Carvana to finish at 72, all the way up here. So if you want to double your money with call options, risk $1,000 a contract, go for 100% return, you need Carvana up here. I need Carvana right here. Do you guys see the power of this? I hope you do. Let me go ahead and throw this one in there. Trading at 115. Bam. All right, now let me go ahead and write that Apple one in here as well because I totally forgot to do that. Apple, what do we do for Apple? Bought the 215. I mean, excuse me, the 212.5. Sold the 215. And I got in for a net debit of 125. All right, here comes the Apple one if you missed that. And it's also posted in the doc. Good question, Linda. Linda wants to know, do we have to close them? Well, for me, Linda, what I'm looking for is I'm looking for my full profit. So I typically hold until expiration. And if Apple's up here at expiration, because my strike's 215, so I need it above 215. If Apple's all the way up here at expiration, I just let it expire. However, some people, like I know Nate does, and a lot of you guys as well, like to set profit targets. We did it on NVIDIA earlier this week. And we did it on Amazon, I believe, which I don't think Amazon has hit yet. But basically, you would just put a sell order in at about 50% higher the where you paid to enter and just leave it good to canceled. And if at any point Apple makes a move higher, it can get you out early. But we can do it. Nate, I'll let Nate do a full training on that since he's the master of those automated exits, if you will. So now, how do we trade wrap orders to the downside? Let's say we're bearish on a stock. What's the stock we're bearish on? I'm not super bearish on the markets right now. Although Progressive, talk about a stock looks like you should be bearish on. Ugh, one of my top holdings, eating me alive. Did we have a bearish stock from Tuesday? Oops. And my hope here, I'm not going to cover every stock today, but my hope here is that you can take what you've learned here and then apply it to some of your other strategies or approaches. Wow, ISRG below the 200-day. This stock was just a beast. It's a healthcare stock. Healthcare's been weak. Let's go ahead and say we want to trade the ISRG to the downside. It's probably not going to give us good options, but we'll try it. Again, if you want to buy puts, 700, 800 bucks to trade it to the downside, there's no way we're going to get filled for this. There's not enough liquidity right now. It says 30 cents. That would be amazing. You'd make $1 trillion. All right, let's look at a different one. Oh man, T-Mobile's still breaking down on us. Well, I mean, I don't have it, but I thought it was going to turn around by now. Service now. Wow, Autodesk. Ugly. All right. Anyone got a good one for me? I don't want to trade Walmart to the downside. Ford. Ford's going higher. UNH is a good one, probably. All right. This one's been had the snot beat out of it. But let's say we think UNH is going lower. Moon flipped red. $300 stock. Call options are 600, or put options are 600 bucks. But if you want to wrap it, and then again, this is just for example's sake, I'll take it for example's sake. I didn't do a full analysis on this or anything. But if I want to trade UNH to the downside, I would do the same thing, but with the puts. Just wrap the current price of the stock with puts. So I'd buy the 305 put, and I would sell, oops, I made a typo over here. And I would sell the 302.5 put. I'm just typing this up for you guys. Right now it's trading at 133, 135 we'll call it. This is an example here for a bearish example. And then it's same sort of thing. We only need UNH. I have to like zoom this crazy. Below 302.50. So just below here by that time frame, and we should make, I think it's about 88% return on investment. Let me just plug it in here. So we'll just scroll down here to the bearish ones. 305, 302.5, say one contract, 135, does all the calculations for us. We make 85% return on investment if UNH falls about 75 cents from here. That's all we need. 75-cent move on a $303 stock is 0.2%. Stock needs to drop 0.2% for us to make 85% return on investment. So I'll go ahead and send that off just for example's sake so we can reflect back to it later. Now, really quick, I see our full hour is up. Let me go ahead and open up the chat here, answer any of the questions you guys might have. And then I do want to give you guys one more shot. Oh, filled right now on UNH. One more shot to trade the dollar options with us right now. We don't know how the week's going to end. We still got another day tomorrow. Markets are a little bit volatile this morning, up or down, then back up now. We'll see how it finishes, but so far, looks like we should be able to walk away with 3 doublers this week. That's my hope. And even if only 2 of the 3 win, we're still going to double our money on the week. So today, I want to give you another chance to trade these with us where I do all the work for you. I calculate it for you, do all the research. And you can just take the trades each and every week if you want to. And again, this is the portfolio I'm talking about when I say perfect income trade, because we are using an income style of trade and just twisting it for these better returns. And we've been just crushing. This is about 18 months of live trading here. You can see the results. Do you have to have a margin account? You do have to have at least level two. It's not naked, so we always are risk defined. But typically, most brokerages that's level two. Simon, I do not use a close order. I let it expire. However, if you do want to use a profit target, Nate will cover that here in some later trainings. Wow. Nate, you got another winner on overnight. Let me go ahead and post this here. You're on a hot streak there, guys. Amazing. All right, well, if we don't have any other questions here, let's go ahead and pull up, Dion, if you don't mind, pull up that training. Eric, I think it's $SP or period XSP. Would having the perfect income system and income machine be redundant? No, they're actually very different. Income machine is looking for the safe plays and the money where you can get between 10 to 30%. These are a little bit more aggressive, although I don't think it's too terribly aggressive because we need a tiny move in the stock and we get to double our money. So it's a little more risk for a little more reward here. Bidding benefit of letting it expire is that you get to write it off on taxes. Oh, nice, Mark. I did not know that. Little nugget for you guys.